One day you're up 400 points, the next, bam, a 300-point gap down. Welcome to the absolute chaos on Dalal Street right now. Look, if your portfolio is getting thrown around and you're just sitting there thinking, do I buy, do I sell, do I just shut down the app and hide? You are definitely not alone. So in the next few minutes, we're going to slice right through all that noise. We'll figure out the one thing that's really driving this market, and I'm going to give you 2 solid strategies to not just get through this, but maybe even come out on top. Let's do this. So, here it is, the million-dollar question, right? Is this the big one? I mean, for months, every single dip was a buy the dip opportunity. But this just feels different, doesn't it? The sheer violence of these moves, it feels like more than just people taking profits off the table. So is this it? To get an answer, we have to look at how the market itself is pricing in all this fear. Just look at this number, plus 50%. That's how much the India VIX, the market's fear gauge, spiked in just 2 trading sessions. So what's the big deal? Well, for you, it means the cost of protection. Those options premiums, they're going through the roof. It's getting expensive to hedge. And it tells us that the big players, the institutions, they're getting ready for some massive moves. This isn't just a mood swing, folks. This is a bright red warning signal. All right, so let's get into our first section here. We're calling this Red Alert on Dalal Street. And for good reason. This kind of market, it's trapping everybody, even the pros. What you're looking at here is a perfect trap for traders. One day, some good news hits, and the Nifty just explodes upwards. Anyone who is short gets squeezed and has to panic buy. Then, you wake up the next morning and, boom, a 300-point gap down, trapping every single person who bought into that rally. It's a classic whipsaw market. And its only job, really, is to shake people like you and me out and make us doubt everything we thought we knew. But here's the thing. This volatility, it's not random. It's not about company earnings or what's happening locally. There is one single, massive global threat that's just steamrolling everything else. Let's talk about the real fire that's burning right now. And this is the absolute key. The root cause of all this chaos is the escalating conflict in the Middle East. And why is that so important? Because you can't plug a war into an Excel sheet. No PE ratio, no earnings forecast, none of it matters when you have the risk of a global supply chain nightmare. In this kind of environment, the only real trade is risk off. And all those other fundamentals, well, they just become noise. And here's exactly how that geopolitical risk hits you directly in the wallet. Crude oil is creeping up to that big, scary number, $100 a barrel. For India, an economy that imports over 85% of its oil, this is a triple whammy. It means higher petrol prices, which means higher inflation for everyone. That forces the RBI's hand to keep interest rates high, so forget about any rate cuts. And it directly crushes the profits of so many companies. Think paints, aviation, logistics, you name it. And this right here, this is the global choke point, the Strait of Hormuz. All the conflicting headlines we're seeing, one day it's open for business, the next there are restrictions, that's being done on purpose to create anxiety in the market. See, the market can handle bad news. It can price it in. What it absolutely hates is uncertainty. And any real shutdown of this tiny channel would be a direct shock to the world's oil supply, sending prices haywire. Okay, so we know the cause. Now let's actually map out the damage. Where is the bloodbath happening across the Indian market? The main numbers look bad, sure, but it's what's underneath that's really worrying. Yeah, the Nifty has taken a sharp hit, but look closer at the Bank Nifty. An 8% drop from its peak? That is a big deal. Why? Because banks are the lifeblood of the economy. When the very leaders of the bull market start to break down this badly, it's a huge red flag for the health of the entire market. And this isn't just a healthy rotation where money moves from one sector to another. No, this is widespread carnage. There is nowhere to hide. Even the sectors that were on fire, like banking and auto, are getting hammered. This is what we call a risk-off market. Investors aren't just moving their money around, they're pulling it out completely. And that kind of selling everything, is a classic sign of pure panic. Okay, enough of the doom and gloom. Let's switch gears from problem to strategy. In a market that's just reacting to headlines, trying to guess the next move is a loser's game. What you really need is a solid plan. So let's open up the investor survival kit. Now, this is a powerful strategy the big guys use, but it's actually pretty simple. Think of it like buying insurance for your portfolio. First, you buy the whole market with an ETF, something like Nifty Bs. At the exact same time, you buy a put option. A put is just your right to sell at a fixed price, so it acts like a safety net. The cost of that option, your insurance premium, is around 4% of what you invested. What this means is your absolute maximum loss is now locked in at just 4% no matter how low the market goes. And here's the best part. If things turn around and the market rockets up, your potential profit is still totally unlimited. It's a defined risk, high reward way to play it. Now, maybe options aren't your thing, and that's fine. If you're a long-term investor, the strategy is simple and timeless. Discipline. Please, don't try to be a hero and catch a falling knife by throwing all your money in at once. Putting in just 20 to 25% now gets you in the game in case we get a surprise rally. But more importantly, it leaves you with a lot of dry powder, cash on the sidelines, so you can buy great companies at even bigger discounts if this correction gets worse. When you boil it all down, the market's future really comes down to these two scenarios. The bull case on the left is pretty straightforward. Any good news, any talk of a ceasefire, and you could see a massive relief rally, maybe even a 4 or 5% gap up overnight. The bear case on the right, the war gets worse, crude oil just won't budge from over $100, and in that case, the Nifty's critical support level at 24,000 is almost certainly going to break. Your entire focus right now should be watching the news for which of these two paths we're headed down. And that brings us to the ultimate question that every great investor has had to face. In these moments of pure fear, you're standing at a crossroads. Is this a crisis you should be running away from? Or is this one of those epic, generational buying opportunities that legends are made of? You know, Warren Buffett's wisdom has never felt more true than it does right now. This quote, it explains exactly what's happening. Wealth isn't being destroyed here. It's simply being transferred. And the only question you have to ask yourself is, which side of that transfer are you on? So here is the one key takeaway I want you to leave with. For now, just stop staring at all the complex charts and technical indicators. Right now, the market is driven by one thing and one thing only. Your focus needs to be laser sharp. Just watch the news about the conflict and how it's affecting crude oil prices. That is the only signal that really matters. And I'll leave you with this one last thought: fear. It's an incredibly powerful emotion, but it is a terrible financial advisor. In the end, the real test for any investor isn't about predicting the future. It's about whether your strategy, your plan, is strong enough to survive the fear of today. Hey, if this analysis gave you some clarity in all this chaos, do me a favor and hit that like button and subscribe for more content like this. But now I really want to hear from you. What's your move? Are you buying this dip? Are you hedging? Or are you just sitting on the sidelines in cash? Let me know your strategy down in the comments. And of course, the important reminder, all of this content is for educational purposes only. It is not investment advice. Please always do your own research before making any decisions with your money. Thanks so much for watching.